Hello traders, my name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and welcome to a daily analytical report with Alpari. Today we do have FOMC meeting minutes, but we are not so excited about that as usual. Usually minutes bring volatility to the market, a bit of uncertainty, but this time everything is more or less clear. Right now we are expecting 3-4 interest rate rises in 2017, and we don't have this uncertainty which is usually connected with FOMC meetings and Fed's actions. The story of the day, well, from my point of view, is a huge upswing on oil. Upswing driven by the expectations that we will have a extension of the agreement from OPEC. Also, traders are anticipating a better number in crude oil inventories today, which will be shown. Let me show you the calendar. Here, let me adjust the filters. You will see the crude oil data. We are expecting the number to decline, as you can see here. So that is why traders are buying oil at the moment. Sell signal is off the table. I will show you that on the charts anyway. But on oil, it seems like we do have a fundamental and a technical switch from the sell signal to the buy signal. So, in my opinion, this is kind of the most important information on the markets right now. And because on Forex market we do have corrections of most of the movements. On indexes we do have corrections on DAX, S&P 500 as well. So no major swings, just minor corrections. Only major swing is on oil at the moment. Today in 12 minutes we will have introduction to the non-farm payrolls, which will be shown on Friday, because we do have ADP employment change on Wednesday. Today in 12 minutes we are anticipating 187,000, and we will be able to watch the reaction live from this event. Still to come, on Wednesday. On Thursday we do have ECB monetary policy meeting accounts and meeting Donald Trump and Xi Jinping. On Friday, manufacturing production from Great Britain. Non-farm payrolls, obviously everything will be influenced by non-farm payrolls this maybe not this week, but Friday definitely. Okay, let's take a look on the charts right now. First we will start with the oil. Here you can see Brent, and we had this sell signal was triggered here. The price was advancing lower here, as you can see. The price created a descending triangle formation, so horizontal support and lower highs, and then we managed to break the upper line of this formation. The price advanced higher, broke one horizontal resistance, midterm horizontal resistance, then broke another one, very important. As you can see, it was a resistance in October. After the breakout, it was a support in December. They didn't break it straight away. Small correction and then a huge upswing. Well, scenario is positive, right? But it depends if the price will continue to go without a correction or they will first correct this movement a little bit. I wouldn't be surprised if the price just go along with those two lines which I draw on a trading sniper video, right? That would be the scenario I would like to see on oil. Well, actually, I'm kind of against this OPEC deal. I do not believe in that. And not that I'm surprised with this today's upswing and the recent upswing from oil. But such an upswing based on expectations is never a good thing. It's purely speculative. Obviously, it can be right, but it lacks fundamentals behind it. DAX. What is that? Is channel up formation, as you can see here. We could also draw some other lines, like those, for example. We do have a channel up formation, and the price created head and shoulder formation. Maybe not the prettiest one. That's not the best head and shoulder formation that I saw in my entire life, but it's right. It's right. We do have those bounces from the neckline, left shoulder, head, and right shoulder. Now we got this bounce from a neckline. So first attempt to break the neckline was unsuccessful. If the price will manage to close below this level, that will open a way to this horizontal support here on 12,100 points. Here, a psychological barrier as well, and also to the lower line of this channel up formation, so here. But for that, we still have to wait. We still have to see what is going to happen here. So far, we do have a potential for a correction, but you know how traders on stocks behave. They just buy every single dip faster than you can imagine. They do not allow any bigger correction to develop. They just, when they see lower prices, they just instantly buy, and it's how it is there. S&P 500. They try to correct post-Trump movement, as you can see here. This is the movement from the election. Pure upswing. And the price created a wedge formation. Wedge is closed between blue lines. Buyers, seems like buyers have control over this formation. They are keeping the price relatively high below the upper line of the wedge, and they are just waiting for a breakout. As long as we are inside the wedge, going long is more risky. Most of the traders, they wait for the breakout to happen, and for them that will be the buy signal more trustworthy than just the price being inside of the wedge, because only the fact that the price is inside of the trend continuation pattern does not mean that this trend continuation pattern will finish now. It can go for a bit longer time, so the price can make lower highs and lower lows, lower highs and lower lows, and after that they can make a breakout. So no reason to enter too early. Now, index is done, oil done. We can move to currencies. In currencies, we do have this American dollar to Polish zloty. I'm gonna start with that. It's I like what I see here on this instrument. It's going very technically. Last week finished with drawing this hammer candlestick on a long-term uptrend line, and traders followed that signal. As you can see here, now we do have a Wednesday, but on Monday and Tuesday traders followed that signal and were creating higher highs and higher lows. Now the prices broke the support in a bit shorter term. This is a beautiful flag. Also here, let me do it like that. This alone is a head and shoulder pattern. Maybe different color. Right, this head and shoulder pattern. If you don't see it, it's a head. It's a left shoulder. Sorry, it's a head, and it's a small right shoulder. Now the price broke the lower line of the flag and the neckline as well, and maybe we will test the long-term uptrend line again. Alright, so that's the situation on American dollar to police water. That would be really nice if we could see the third same bearish impulse here. So look, 4,500 pips, 4,500 pips, 4,500 pips. Also, if we are now we don't have a correction equality, because I was wondering if this correction will be the same as this one, but no, they won't be the same. I can see it here. Euro dollar is in a side trend. Those movements are around 30, 35, 40 pips a day, which makes trading on euro dollar very boring and unrewarding. In terms of unrewarding, well, I had a short position on my live trading account. It was open somewhere here, and I closed that I think here. So I cannot say that I wasn't rewarded, but I prefer much bigger trends, stronger trends. Here is just a sideways trend, maybe a possible reversal from here, but I don't think the price will make any significant changes before FOMC minutes or even non-farm payrolls, right? So to the closest support we do have 58 pips, to the closest resistance we do have 25 pips. The volatility is really low. Daily change from yesterday, what's the daily change from yesterday? 40 pips. From 2 days ago, from yesterday, 37. And so far today, 27. So we can see that's a very low value. Now, actually, we will have ADP. Let me show you the filters. Okay, we're gonna have ADP now. So let's look a little bit closer to the situation on euro dollar if we will have a reaction on this data. 30 seconds. We're gonna wait 30 seconds here. I won't show you, oh, now 15. I won't show you anything new in the meantime. Just 10 seconds. Around 187,000 is expected, something like that. Oh. All right, we have a reaction. That's a downswing. American dollar is getting stronger, so most probably the data was a bit better than expected. Let me check. I had to change the instruments because this is other account, ECN. Okay, I know we have a revision from the last month, from February, revised to 245 from 298. And yes, ADP non-farm employment 263. So much better number. Established was 185. And we got 263,000. So number is much better than was expected. Right? On euro dollar, to wrap that up, what do we have is a boring side trend, right? We did ADP was not a game changer here, so we just continue this slowly, this slow walk sideways. Australian dollar to New Zealand dollar, they are bouncing from the trend line again. We can create a pennant formation here. They almost got to this horizontal support. It looks promising. It is a pennant formation in the uptrend. It is a pennant formation after the long-term downtrend line here, which was broken, which is now support. So it looks positive. It looks optimistic for buyers. Euro to Australian dollar does not look optimistic for buyers. Why is that? Because they bounced again from the horizontal resistance, highlighted with this green color. And maybe, but just maybe, what we're having here is the left shoulder head and a possibility of a right shoulder. So actually, this lower line of the channel up formation is off the table. The more accurate would be this line. Yes, that will be more accurate. Once we will be able to break this line, that will trigger an ultimate sell signal here, showing this direction. New Zealand dollar to American dollar, as expected, the price is declining. It would be nice to see the price on this support. Even better, it would be nice to see the price breaking this support. But for that, we need to wait a little bit longer. So far, it does not look like it's gonna happen. Well, it's not gonna happen soon, but maybe later, because it's a daily chart and we are still a few hundred pips, well, not few hundred, 80 pips above the support, but anyway, the volatility on New Zealand dollar to American dollar is very, very low. American dollar to Swiss franc, here we do have a potentially buy signal. Why is that? Because we do have this wedge formation, which is in a trend continuation pattern, and the price advancing higher, and we do have ascending triangle formation, and all that combining together gives us a positive outlook on this. American dollar to Japanese yen, we stopped the decline, the price advancing higher because of the data. Actually, I would adjust this. It's not so wide and it's not so low. That's somewhere here. Right, it looks better. Yes, this is the closest resistance. Obviously this head and shoulder formation is off the table. So let me delete that. It was present, but it was a false breakout there. And now we're just waiting for another contact with this resistance. Once the price will be able to break this resistance, that will open a way to the upper line of the flag formation. Next one is cable. As we mentioned yesterday, we are in this sideways trend and this symmetric triangle formation, and the price is located below the upper line of the symmetric triangle formation, which indicates that there is a willingness for a breakout. Traders are just preparing something. They just need a trigger. They just need a trigger to break the upper line of this formation. We do have a support like that. Most probable scenario is the price advancing higher and breaking this resistance. British pound to Canadian dollar. Here, what do we have here is a bullish engulfing. You know that from the previous daily analytical report, and a sideways trend, and after that the price finally advancing higher. Now those candles are not very encouraging to trading on a weekly chart. As you can see, it's an inside bar of a doji, which is completely not tradable unless you want to, if you want to earn money. It's not tradable. That's not the winning pattern at all. So we just have to wait here, but in general the sentiment is positive. Unfortunately, it's not supported by the current situation, because the current situation is more like a sideways trend. And gold. Yesterday we wrote an analysis of gold when we were above this horizontal resistance here, and we are advancing higher, trying to break this resistance. But as you can see, and we were bullish, obviously. But the price is going lower. Now it's also driven by the better ADP data. It's definitely stronger dollar is not helping here. It's helping the bearish side of the market, but it's not helping the buyers. And actually, buyers can pay a big price for that, because they were so close for a breakout. They almost broke the upper line of this formation. It would be, I would say, it's a symmetric triangle in an early stage. Symmetric triangle. They almost break this dynamic resistance. They were for some time above the horizontal support, so they had everything ready for the upswing, but they failed. And that's gonna be their big problem. Here we have a horizontal support. Breakout here will trigger or head and shoulder formation or triple top formation. Actually, there is no difference. It's all up to you if you think that this resistance is higher, that this top is higher, or this top. In theory, when you're trading using head and shoulder formation, the right shoulder shouldn't be higher than the head. But when there is not such a big difference, yes, third higher is bigger, so it's more a triple top formation, but it's just a matter of name. It shouldn't be such a big deal. What is important right now that we do have this horizontal support here, and we are waiting for the price to test it. Okay, also in addition to this, let me show you what's happening on other major pairs. I would like to show you American dollar, not this template. I would like to show you American dollar to Canadian dollar in the long term. Unfortunately, we are in a sideways trend, but I like what I saw yesterday. It's a hammer, it's a shooting star candlestick. Okay, like that. Also, we got this, maybe this one. That resistance, it was broken, as it seems. It's a false breakout. That's the closest support. Usually the price goes exactly here after such a false breakout. Right, another instrument, euro to British pound. Alright, what do we have here? It's a long-term symmetric triangle formation. They had chances for head and shoulder formation, but it's a symmetric triangle. Depending which time frame you will take, you have those upper lines here. To be precise, you have a lower line here. So we're just waiting, and we tested the upper line. Now it looks like we're gonna test the lower line of this formation. What are the chances that the price will get there? I would say they are quite high, because the price is making lower highs and lower lows. Now made the lower high, so it's time for a lower low after a lower high, right? I wouldn't be surprised if that actually happened. And last but not least, euro to Japanese yen. Daily chart. We are trying to defend the horizontal support. Look at that. It started here. It started in July, then December, then end of February, and now. Right? We are on a daily chart, so look at that hammer candlestick, kind of defending this support, as you can see here. We are defending. It's not a normal comeback to this horizontal resistance, as it often happens, but it's a strong pullback. So I would be expecting some more something like that than that, because that's a trend continuation pattern, and what we can have here is a kind of trend reversal pattern. V-shape retracement is a trend reversal pattern. If so, let's see how deep the price can go. Well, deep it would be the other way, but how far can the price go? First resistance is just above current price. The second one, 38.2 Fibonacci level. Will it be important? Well, it was a support here. It's a big cluster here. Maybe. We will see. We will leave it and see how it goes. Right, we got a few interesting setups. Not much, but still we are trading what the market is telling us. Again, being a trader is not trading every day. You're not day traders. You should focus on earning money. You should be focused on investing, and you do that by trading when there is a proper occasion. When there is no occasion on the market, or occasion is not does not make you excited about that, so it's not so strong, you should just not be, you shouldn't be trading. You should just turn off the computer and do something else. Sometimes it happens like that, and that's when traders are checked. that's when you can show that you're a good trader, by not trading. Because it's easy to press any button and be on the market, but it's not so easy to stay off the market. I know about over trading problems, it's a huge thing, so I want to warn you about that. Remember also that trading and investment in financial markets involves an element of risk. And for more trading views, information, analysis, follow us on our Twitter account and our website alpari.news. Thanks very much and goodbye.